Welcome back to Market Day Report. Welcome to a Tuesday. Okay, markets are trading. We'll have Chris Swift joining us in a moment, trying to break down some of what we're about to talk about, like the corn market. In Chicago, it's been moving higher, up 1.5 pennies on the D's at 426, and the March penny higher, 433.5. That March contract is the most active. Over to soybeans, January up 3 at 9.88 1/4. The March contract 3 higher at 9.94. Let's go to the wheat market now. And we watch July Chicago 4.5 higher, 566.25. Hard red, July contract is 6.25 higher at 561.75. Really, slightly above the halfway point in that 10-cent trading range of the July contract. What about spring wheat? Minneapolis, well, let's look at D's at 569.5. It's 9.5 higher, the most active now. March at 595.5. It's up 7.75 cents. And in New York, cotton futures are in the red. The March contract 71.47, down 2 points, 1 tick lower on the May and July, 9 lower at 73.48. Chris Swift is with Swift Trading. And Chris, threw out a bunch of numbers. What are you watching?
You know, Tony, when we look at the corn market, we have triangulated, and we're in a really sharp point, about a 15-cent trading range right here. And although that previous trading has been to the downside, this may look more like a bottom than it does just a hesitation to further trading lower. When we look at things that are of real interest to us, we look at soybean meal. Soybean meal's dropped another $40 to $50 a ton, now trading under $300 in some of the front months there. The D's, Jan, and March are right at $290, $295. So when we look at for something that's going to be advantageous to our producers, specifically hog and poultry right here, soybean meal is about $50 cheaper a ton, than what we've seen over the last several months. So I know about 4 or 5 months ago when we were around the $340, $350 range, I thought that was a really good price then, and we locked some of it in. Now we're $40 to $50 less than that now. It's time to go back in and lock in some more and average down some of those prices that we know we're going to be feeding an enormous pork production and poultry production going into 25.
Yeah, you mentioned the soy meal contract, and as we look at what has been going on with soy oil, both of those markets are moving higher. But again, they've been hammered along with beans losing 12 to 24% of their value this year.
Yeah, absolutely. So the oil's held up a little bit better. It's not made new contract lows with both beans and the bean meal having made new contract lows here recently. So when I look at that, I have to believe that oil probably being the strongest there, an edible oil and vying with palm oil, as well as for the biodiesel that we know is probably going to continue through 2025 and its exploration of being able to turn it into aviation fuel.
Okay, want to bring up an outside market that has been up over 27% year to date, and that's the gold market. We look at precious metals, gold and silver, with a big rally in front of the election last month, but seems like they've cooled since then.
Yeah, the inflation aspect, the president incoming is wanting to lower inflation. How much he's going to be able to do in a short period of time is pretty much unknown. But gold's on a pretty good trajectory. It's been up for quite a while. To see it set back a couple of $100 would not be out of the ordinary. To see it move higher, especially with our U.S. dollar moving higher, it doesn't seem quite as likely.
Well, welcome back to Market Day Report. Will we see cash cattle develop this week? I will go out on a limb and say yes, we will. 100% sure we'll see cash cattle develop. What we don't know is where the price will go. Can we get any indication, though, by looking at what's happening with the live cattle market? Well, we are higher, up 85 on the February at 188.75, now 82 higher. It's been as high as 189.07. Now, the April contract is traded above 191. We've retreated a bit, but still 82 cents higher on the April at 190.95. Now for the feeders, the May contract at 258.57 is up 117. The August is trading higher. And we go to the hog market. We continue to see a rally there. February up 90 at 88.85. And again, I keep drawing our attention to the June and July contracts trading now above $103. The June even at 103. It's up 57. Let's bring back in Chris Swift. Swift Trading, all right, pretty impressive watching all three of those.
Absolutely, and especially in the hog market where the index has been declining today, down another 85 cents at 84.36, with all the futures up 50 to 60 and carrying a large negative basis. When you talked about that June at 103, that's $17 from where the index is right now. So when we talk about hog producers wanting to take advantage of something, here is a spread where current cash hogs are $84 and hogs in June are 103. Might be an aspect to look out there and say, I'll take that $17 basis spread right there and worry about what price of hogs are in June. So things like that are very beneficial to the producer. Then we go over and we look at the feeder cattle and just the opposite. We've got a very, very narrow basis spread in there, suggesting that neither side, neither the producer selling the product or the procurer, the cattle feeder buying it, has any leeway either way. They're having to pay the same price today as what they would anytime out into the future. So it kind of hurts that margin, especially when you're going out to the cattle feeder. Feeder cattle prices are up pretty sharply, not nearly as much as calf and stocker prices are, which narrows that margin, but it's kind of bled over into the feeder cattle market a little bit, narrowing the margin significantly to the cattle feeder.
Okay, one last one here before we wrap up. We always talk livestock futures with you, but are there any other markets that you've got an eye on right now?
Crude oil. Crude oil is something, energy is something we're going to have. And right now, as much as we believe the new administration will attempt to try to keep energy prices low, they may not be able to. And the contraction in price that they have gotten into leads me to believe they're going to break out one way or the other sooner than later. Right now, I keep thinking that the aspect is to the upside more so than the downside.